Thank you, everyone, for your time. As I said, my name is Henry Nakamura. My colleague there is Don Langelo, and we work at Liferay. What we're here today to talk about and discuss is sort of the impact of customer experience, as it relates to the evolving customer demands in the financial services industry. So let's get started. If you go to the next slide, please. Great. So digital transformation. This should not be unfamiliar to anyone, right? But the key part of this phrase that you're seeing here is accelerating. Digital transformation has been imperative for financial services organizations and really all organizations across the board that are intent on staying competitive and relevant even well before COVID-19. But we're really now at a critical moment in time, right? The demands, the expectations of your customers, your vendors, your agents, and even I'd say especially your employees, has never been higher. And the race is on, not just for banks and credit unions, but all financial institutions to embrace digital transformation and deliver modern experiences that users now expect and demand. And that's the thing that's going to set everyone on this call apart from their competitors. So for financial organizations such as banks, credit unions, this might involve devoting resources to improving a mobile consumer experience, investing in projects like an app upgrade, or even scaling up infrastructure, to process more transactions, eliminate downtime. And for capital markets firms, digital transformation efforts are really more focused on data analytics, high performance computing. So as organizations try to leverage big data and automation to shave every possible millisecond off transaction times. Here's the thing. In both cases, the emphasis here is on growing the business and improving the customer experience through technology. So digital transformation means we have the power to transform the financial services industry to be even more customer-centric. And we're no longer just competing with other financial firms, quite honestly. The attention and loyalty that we're competing with now is, anyone who's offering a positive experience. This includes a retail, other technology brands, and the needs and the values of their time is now being catered to across all industries. Fair or not, that's how you're going to be judged. And if your organization doesn't take the lead, you can bet another one is just waiting to do so. So the digital transformation race is on, and it's speeding up. Next slide, please. So I can bet probably every presentation you hear today, and maybe for the next 6 months, is going to mention COVID, right? And the impact of it on our lives. And that's for good reason, right? It's forced organizations to adopt, to pivot, or evolve processes, as the world sort of realigns to this new normal. So as we move into this post-pandemic world, investing in customer satisfaction will become a priority for financial services organizations that are intent on both preserving and expanding a loyal customer base. Today's financial services industry operates with a global, a dynamic environment that prides itself sort of on competition, on resilience. But COVID really challenged financial institutions worldwide to, reassess customer experience models, and tap into to the potential of digital platforms that are designed to meet evolving or changing customer requirements, while both supporting global efforts to ensure a safe and secure environment. So you can go ahead and do the next one. Thanks. So this is back one. Don't skip over my mom. That is literally my mom. She gave me permission to use this photo. And the reason that I introduce her here is because, the one thing that we know is that people's behaviors have changed, right? They've changed rapidly and dramatically in the last year or so. But, interestingly, what the data is telling us is that these changes are going to remain permanent, right? They're going to have permanent effects on how people do business, with financial institutions, with all institutions, but specifically with financial institutions. And one clear trend is in mobile banking. I talked to my mom in advance of this meeting last week, and I asked her how she was doing her banking, and she uses Chase's mobile app. Now, this is a woman, 72, who has an iPhone, uses it for FaceTime to, as you might expect, talk to her children, talk to her grandchildren, send some emails for work, but really isn't involved in a lot of the other opportunities that the phone and apps provide. In the last year, she is working entirely with her bank on her Chase mobile app, and she loves it. She's she's depositing checks, she's transferring money, she's checking her balances. Now, she's no Luddite, but this is an example, I think, that probably many, many, many people who are listening to this presentation can relate to. Behaviors are changing, even amongst the groups of people perhaps that we thought were going to be most resistant to this change. So you can go ahead and forward again. Great. So now that we sort of all recognize that these behaviors are changing and changing rapidly, as we mentioned, let's talk about a recent survey from Fidelity National Information Services, FIS. They found that this mobile move is most likely to stick. According to them, they work with 50 of the world's largest banks. There's a 200% jump in mobile banking registrations in early April, while mobile banking traffic rose almost 100%, 85%, right? So great opportunities. Here's the thing. The shift also uncovered some, needs and challenges for financial institutions that they really hadn't planned for or even underestimated, right? So consider branches. Branches have been closed. No tellers have been available. They've been dealing with a significant uptick in call center traffic and long wait times, right? So according to Brandon Larson, who's a managing director at Novantis, it's a fintech company that uses big data, machine learning to analyze data about bank customers, deposits, and markets, these unexpected, I'm using air quotes, hiccups were related to an increase in the demand from COVID-19. And it was noted across the industry. It wasn't just retail banking. He associated this, very directly, for example, with stimulus checks. People who normally might have checked their banking balances once a week, once every 2 weeks, we're now coming 2, 3, 4 times a day. And networks, they're often prepared, perhaps yours is as well, for some upticks, some surges, 2 or 3 times the volume. But businesses run into the problem when that capacity is pushed 10, 15, 20x, 50 times expected usual volume. So, remember that those deficiencies, like performance, bandwidth of your CSRs, et cetera, those limitations are felt across the entire company, across the entire ecosystem by all users, both external, but also internal. So, even as banks and branches are starting to reopen and see more traffic, industry watchers are saying that shift to online is likely to remain. So in a recent survey, also by Novantis, only 40% of respondents said they expected to return to branches post-COVID, and my mom would be one of them. Also, according to Maria Schultz, she's an executive at FIS's North America Banking Services Group. She noted that we should expect more U.S. customers than ever before. They'll be using mobile devices, not to do the things that they have already done, but to expect a wide range of additional banking needs and services provided on their mobile accounts. So that's what really introduces us to this demand for new online services. In the current crisis, banks said they've seen this huge uptick, not only in account logins, remote deposits, and online account openings. Jamie Warder, he's the head of digital banking at Key West. He said that the bank has been seeing double-digit month-over-month growth in online usage. These should all be triggers. These should all be opportunities that people are considering in their own environments. Everybody's experiences obviously are different, but the trends are absolutely there. The things that have been predicated by the pandemic is going to have these long-lasting effects. So some of those other needs that you might be considering. Digitizing home loan home equity loans, solutions that connect customers with real live tellers remotely and virtually on a secure channel. We mentioned online account creation. Bank of America is looking at simplifying and creating like just a 2-click process for loan payments. And always what we've even seen personally here at Liferay, where we've built a number of sites for banks who allow customers to apply for PPP online. Okay, so please, next slide. Okay, so what are we looking at? And Jason, I'm going to just ask you to, you'll see the sort of the cues. There's a couple slides, there's a couple of bullet points here that we'll go through. What does the future look like? What can we say then is in store, knowing that everything is sort of up in the air? Amongst all this change and disruption, we are seeing 3 primary trends. Number one more, macro environment. So the first thing is macro volatility. That's going to continue. Both here in the US, we have a strong fiscal and monetary response, and globally, economists are, very optimistic, quite honestly. The IMF is forecasting 6% growth globally, 6.4% here in the US, levels that we have not seen in my generation, certainly. But what the pandemic has really taught us is that how fragile these environments and these predictions can be. For example, obviously there could be variants of the virus. The global vaccine supplies are in shortage many places across the world. Inflationary risks and interest rates could easily rise. And of course, there's, quite honestly, an increased likelihood that we're all seeing of higher corporate and individual tax rates. The takeaway here is that nothing really is certain except uncertainty. And we want to highlight that. The second thing is digital is no longer just part of the mix. And we use digital sort of as a catch-all, but really it means a digital transaction or a relationship versus in person. And digital is no longer just part of the mix. It really is the mix, right? The pandemic just accelerated these trends that we were already seeing, right? As more and more people continue to move their lives online, socially, economically, what have you. Their lives now are more and more circled around digital and interactions. So now the majority of people that are actually preferring digital interactions, right? Like there used to be the sense that there's nothing beats, going to your bank and talking to someone behind a desk. No longer true. Capgemini survey recently just noted that 57% of people prefer a digital experience to an in-person one. That's up 8 points from the pre-COVID times. And I mean, if we look at JP Morgan Chase in 2020, the number of their retail branches contracted slightly, a couple of percentage points, but their digital users expanded by over 3 million users. The last point, there is this looming existential crisis. I mean, I think that is actually not overstated, and anyone on this call in financial services industry sort of understands what this means. There are incursions by multiple different players who are trying to lop off different pieces of the industry as they see opportunities to serve customer needs individually, right? It's coming from everywhere. So it could be VC capital that's backing like entrants like SoFi, non-traditional firms, Walmart getting into financial services, or even things like nation states like China having the digital RMB option. These incursions are constantly happening. The problem is, or the issue is, with so much change, now's the time that those incursions can make headway against your organization and your enterprise, right? We're talking about payments, like Stripe and Venmo and Alibaba. Obviously, brokerage firms. Robinhood's been in all the news with GameStop, obviously, Wealthfront. Consumer finance, we mentioned SoFi. Apple and Goldman Sachs are talking about a deal. Walmart, we mentioned before. Even in auto lending, right? AutoFi. These are all ways that existing institutions are going to be challenged by the prevailing winds. So The impacts of these disruptors, obviously are uncertain, and how they play out is going to be determined. However, the one thing that is clear, disruption is happening very quickly now, even more rapidly than ever before. And this is in the environment of financial services, which I think, we can all agree has very historically been a slow changing industry and quite conservative, no longer the case, and that's the new normal. So we mentioned some headwinds, right? But there's also some good news for financial services. Banks and FinServ have three principal and very formidable advantages here. Number one, brand trust. So Chicago Booth, Kellogg School Financial Trust Index ranked banks the most trusted of all major institutions. And that's for major corporations, even to the federal government. Well, maybe not even to the federal government, but including the federal government. And so this trust is something that can be leveraged with your users, as you embrace new engagement models and new processes that, might negatively impact other industries or other companies that have a less of a trusted stance and standing with your customers. Number two, size. Whether we're talking about dollars in assets, the tens or hundreds of thousands of physical locations globally, and the millions upon millions of employees, the industry as a whole has the size to invest in and navigate through this uncertainty and change and make those necessary investments and even make some missteps, right? Finally, and this is really like the most critical piece that I would point to, and that's data. Coming from where we stand, which is a company that is looking to aggregate and visualize and promote data to end users, irrespective of the industry or vertical. Banking and financial services arguably have the most information out of any industry in the country. And that's a huge, huge advantage, especially from where we sit. If that information is there, then it can become relevant and it can become valuable and create actionable insights. Now, truthfully, that problem is what we see is that data is often disparate in different systems. It's fragmented across different databases and even different applications. So it's not being used nearly to the potential, but it is there. So banks and FinServ organizations, they still have the brand trust, they have the size, and they have the data on their side. So what they do with that currency in the next 3, 5, 10 years is going to determine who's going to be the winners on the winning side and who's going to be on the losing side. So how does this happen, right? So we talked about the challenges, we talked about the opportunities. Where do we start? And this is critical. It's what you do with that data that makes all the difference, right? People are demanding relevant, compelling, and elegant experiences. What does that mean? So it's essential to tie all that data together, right? From those disparate sources that we discussed, and display it in a personalized, relevant way, or it's not going to make an impact at all, quite honestly. So it's what you do with that data. And customers tell us all the time, the key phrase we hear over and over and over again, whether it's from our customers directly or the people that they survey that they are serving, it's personalization. So number one, you want to turn random data into something that's coherent and actionable, right? So tying together those disparate systems to create a reliable, consistent system of record, that supports your users, that's key. And then allow things like artificial intelligence, machine learning. We use a technology with Liferay called TensorFlow, which does auto tagging of documents and images, which can, doesn't matter how many you have, whether it's 500, 500,000, or 5 million, will automate these processes and create value and insights based on that information that you already have, right? And assigning metadata as that content is being both surfaced, created, and stored, which allows you really to scale out your systems. And that's the key. You can solve for today, but you need to solve for tomorrow, and you need to solve for 5 years from now. And that's where scale becomes super important. That flexible platform and applications that allow the growth that you are hoping for and anticipating. So finally, being able to analyze that data that was previously random. Number two, you want to take that united data from those fragmented sources and turn it into customer segments, right? So this is where personalization becomes the rubber hits the road, right? People no longer want a laundry list of different available products and services and web links. To be quite honest, that's what we're seeing. Leverage web analytics and categorize known and unknown visitors into different groups of specific audiences that deliver prescriptive, personalized customer journeys that matter to them. That's a hard step for some organizations to realize. Matters to them versus matters to the organization. You can marry that and make sure that it works for you both. But really what we're talking about is meeting customers where they expect to be met. The final thing is delivering rich, elegant, and relevant experiences. And prepare to do it rapidly. It has to look fantastic. It has to be compelling. It has to be easy to use. Remember, digital now is where is the primary way in which your users want to be engaged with you, not a secondary one. So the ability to create customized web content and site experiences for different segments of people, it requires large amounts of content without traditional bottlenecks. Without the bottlenecks of having IT submitting a ticket to IT and taking days or even weeks to make changes to a UI or adding an application or changing a form. At Liferay, we call it citizen development, right? It's our own internal term, but really what it just means is that the non-technical users, sales, marketing, HR, customer success, any generalist can create valuable content and experiences on the fly without needing to code, right? And that liberation of the creation and editing and publishing content has to happen in minutes, not hours or days. And that in turn will result in much, much greater volumes of relevant content that is published faster and driving your user satisfaction. Okay, so finally, looking back at what we've talked about today, we've really been talking about, quite honestly, the evolving customer needs, and you might even consider them demands, right? Because we know that loyalty is, I did a presentation on this about 2 or 3 years ago, loyalty is dead, was the name of my presentation. And it's true, and we know that, right? Yes, you might have traditionalists who work with a specific organization because of the time they spent there, but quite honestly, if you aren't meeting customer demands, they will look elsewhere. And that's because it's happening all around, not just in FSI. So with that, we say focus on 4 primary areas. Number 1, efficiency. Efficiency is the key to growth. What does that mean? The foremost goal of many customer service teams is to ensure customer satisfaction, right, by providing quick, efficient, and personalized service. Some of the things we talked about. But self-service sites are expected to be the most significant way to ensure both. So how does that translate into cost savings, for example? Gartner reports that a live channel customer contact costs an organization approximately $8. $8.01 is what they said per contact. The cost of a single self-service contact on a self-service site, 10 cents. So you can extrapolate that out. Leveraging self-service sites can handle lower value interactions, for example, and financial service organizations can bring about significant cost savings while meeting customer demands quickly and efficiently. So this is how customers that we are seeing are able to both scale and grow and meet those customer demands. Number 2, establish a single centralized location for your customers. Okay, so by creating these self-service customer portals, right, with FAQs, knowledge bases, chatbots, virtual assistants, whatever that right mix is for you, your users, and your industry, customers can go to a single destination to find the information they need. And then why is this so important today? Well, because streamlining that customer experience by centralizing that knowledge, it keeps them within that one location. It avoids frustration of having to look elsewhere, having to sign on to different platforms or applications. And obviously, it keeps their satisfaction high as you are delivering the information that they need at their fingertips. They're getting questions answered without that additional overhead of your personal interactions. We have an example of Infosys Finacle. It's a growing India-based organization that helps traditional and emerging financial institutions drive digital transformation and service to over 1 billion customers. And they recognize a critical need for a more efficient and satisfactory support opportunity, right? So in response, Infosys launched the Finacle Support Portal, which enables customers to monitor status of a ticket, real-time progress of patches, and access their playbook, which was like a glossary of banking terms and FAQs, all at one single location. They have more than 160 leading banks and 50 Infosys partners that are using that portal currently to provide that support a modern day consumer requires. And again, no matter what channel they use, I think that is sort of obvious and doesn't even need to be stated, but every one of these conversations, every customer has to be able to log on from a laptop, from a tablet, from their phone, and have an amazing experience that is consistent across all those different platforms. Number 3, provide a virtual environment that actually surpasses in-person service, surpasses it. So customers, we already heard that people are trending towards wanting to have virtual experiences anyway. But they're increasingly relying on mobile self-service to complete transactions, that were once handled in person. According to a JD Power study, during the height of the pandemic, 37% of retail bank customers said they were using a bank's mobile app more frequently than ever before, and 48% said their preferred means of depositing a check, which I would imagine is relatively new for a lot of people, was via a mobile phone, right? And this just all goes to reinforce this trends that we keep seeing and hearing about over and over again. Customers are demonstrating a willingness to engage with companies virtually. And, for example, a European bank found that customers, came to view getting advice and product information online as more available, more personal, and more informative than going to a branch and calling a contact center. There's truly an inflection point going on, and that's important. And finally, personalize that self-service solution. In another 2020 report, McKinsey asserts that the pandemic has made personalization and the empathy, think of these terms that we're talking about, empathy, personalization, about digital experiences, connections that go with it, even more critical. The report took the long view that said companies should make hyper-personalization in customer care a top goal for 2025. We might argue it's even sooner than that. So financial service customers expect a personalized experience that is tailored for their individual needs, whether that's finding relevant information, completing transactions, or receiving targeted alerts and updates. So with that, I've come to the end of my portion of the deck. If we have time, we have a couple of user stories that my colleague Dan Langelo would love to tell you about.
Thanks, Henry. And I know we're actually over time by 4 minutes here, so I'm going to zoom through the next 2 slides. I'll just do a quick time check with Jim. Do you think we have like 2 minutes to zoom through these?
2 minutes, you bet. Go ahead.
All right, perfect. If we can go to the next slide. All right. So just to tell you a bit more about a couple of our customer stories that highlight some of the most relevant points that Henry outlined in great detail earlier, in terms of how we're looking to enable large enterprises, especially in the financial services sector, to leverage Liferay in their digital transformation. We have Bank of the West, as some of you may have heard of, is formerly First National Bank and currently a wholly owned subsidiary of BNP Paribas out of Europe. With 600 branches in the mid and western US and over 9,000 employees and $2 billion in revenues, Bank of the West uses Liferay for multiple projects, including personal finance, KYC, commercial finance, and as well as an externally facing women resource women entrepreneurs website as well. In addition, we have a recently launched application for PPP associated with the recent COVID relief program. And the key takeaway here is that Bank of the West allows the utilization of our graphical user elements to allow their sales and marketing stakeholders to be able to build these sites comprehensively and on the fly using predefined GUI elements and conforming to a central IT UX guideline to ensure consistent branding across different initiatives, which may vary greatly in scope and target audience. And this allows a much more agile development process, as well as a much reduced delivery to market time while optimizing the use of IT resources. I know that was a lot to absorb in 60 seconds, but if we jump to the next case, another customer of ours we're very excited about is US Bank. US Bank, of course, I'm sure most of you have heard about, the 5th largest financial institution in the US with personal, commercial, and government banking, investment, trust, and payments across 3,100 branches and 69,000 employees and $7 billion in revenues. All of their different clients, as you can imagine, have different reporting needs, and US Bank has been able to consolidate multiple disparate systems, as Henry alluded to earlier, which were each using their own single process application with their own individual user ID and password, and each with disparate look and feel, and unify all of those various functions under one central portal with single authentication and seamless and unified brand experience under the Liferay portal. And this has led to increased customer satisfaction, as well as a consistent experience across all services, as well as allowing paperless transactions for many types of document requests, which formerly had to go via either email or fax, and can now be user self-service. And self-service is a huge part of their implementation. It allows them to pre-screen call-in cases for specific use cases, predetermine their profiles and their data, and put users as well as support staff in a better position to increase efficiency and reduce the cost overhead per interaction. And overall, the platform has also allowed them to streamline their authentication, which has also resulted in a much more confined footprint for security auditing, which makes the compliance process and the annual security auditing process much more direct and much more compact versus going through dozens or hundreds of individual SPAs, which they formerly had. So I realize that was, again, a lot to digest in 60 seconds, but hopefully, if you are interested, please do visit us at www.liferay.com, and there are many resources outlining these solutions and many more for our financial services customers, and we look forward to taking any questions you might have.
All right, and more to the point is we're up to a networking break, and so go visit the Liferay booth as well as the other sponsors. This will give us a chance here then to take a little bit of chance to get to know your other people, visit the sponsors there. So Moth and I wish you all a nice networking break, and we'll pick you up again in 21 minutes. Say bye. All right, we'll see you then.
Thank you so much, everyone. Appreciate your time.
Welcome to the Customer Experience for Financial Services Summit 2021.